Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 132, recorded here on September 8th, 2024. This podcast is for entertainment only and not investing advice. Do your own homework. All right, we'll start with the market update outlook and get into the weekly top Bitcoin news and then the featured Substack post of the week, and then, of course, shoutouts on Fountain. Benchmark S&P 500 on Friday plunged to its worst weekly performance since early March last year, driven by concerns over economic growth after a slew of soft data during the week, especially on the labor market. That, coupled with historical September weakness, led to a gloomy atmosphere and heavy selling. The hotly anticipated August jobs report was supposed to swing market expectations one way or the other on the size of the expected Federal Reserve interest rate cut later this month, but it ended up sparking a debate instead. The attention now turns to next Wednesday's consumer inflation report for further clues. For the week, the S&P 500 slumped 4.3%, while the Nasdaq Composite cratered 5.8%. And blue chip Dow slipped 2.9%. Looking ahead, Wall Street will have its hands full for the first week of September with the economic calendar featuring the August CPI report, August PPI report, and the University of Michigan Consumer Survey as the Federal Reserve meeting on September 19th gets even closer on the calendar. While the earnings calendar for the week ahead is light, it features heavy hitters like Oracle, Kroger, and Adobe. Investors will also be looking out for the quarterly report of meme stock GameStop. Finally, Apple will hold its annual iPhone event on Monday, likely unveiling the latest model iPhones, Apple Watches, and AirPods. Jumping into the Bitcoin news, the first one here is from No BS Bitcoin. Good morning, Bitcoin, from Friday, September 6, 2024. Only 3 examples of illicit tornado cash use were cited by the U.S. Treasury in an appeal hearing on Tuesday. U.S. Circuit Judge Kurt Engelhardt noted that out of millions of transactions, the agency found only 3 instances of money laundering using tornado cash, questioning why the existing designations for North Korea were insufficient to achieve the agency's purpose, reports Law 360. U.S. Circuit Judge Edith Jones also expressed skepticism about the Treasury's categorization of tornado cash as a sanctionable entity, noting that North Korea could still use the protocol regardless of whether the sanctions were in place or not. In fact, just earlier this week, there were reports that the hacker entity which stole over $230 million in user assets from the Indian crypto exchange WazirX started to move funds through Tornado Cash in an attempt to obfuscate the trail of funds. Telegram changes private group rules as Durov comes out with a public statement. On Thursday night, Telegram expanded its moderation to private chats. Users can now flag illegal content for review in these chats as stated on its updated FAQ page. Previously, Telegram treated private groups as off-limits. At the same time, Telegram founder Pavel Durov made his first public statement following his arrest in France. He referred to the arrest as surprising, noting that French authorities had numerous ways to reach him to request assistance. He also announced a personal goal to improve moderation on the platform. We are prepared to leave markets that aren't compatible with our principles because we are not doing this for money. We are driven by the intention to bring good and defend the basic rights of people, particularly in places where these rights are violated. But the claims in some media that Telegram is some sort of anarchic paradise are absolutely untrue. We take down millions of harmful posts and channels every day. We publish daily transparency reports. We have direct hotlines with NGOs to process urgent moderation requests faster. However, we hear voices saying that it's not enough. That's why I made it my personal goal to ensure we significantly improve things in this regard. We've already started that process internally, and I will share more details on our progress with you very soon, Durov said. Mercurio launches a Bitcoin debit MasterCard for payments from personal wallets. The euro-denominated spend card issued by Quico bridges personal use wallets and traditional payment rails and comes with additional KYC and AML verification. Spend supports spending with over 40 cryptocurrencies at over 100 million merchants in the MasterCard network, converting funds to fiat automatically. At MasterCard, we are working closely with partners to innovate and enhance the self-custody wallet experience, said Christian Rouse, Senior Vice President of MasterCard's Crypto and FinTech Division. According to a recent blog post, MasterCard works facilitate self-custody experiences because many users want to avoid centralized exchanges in the first place. The UK's Financial Conduct Authority approved 47 out of 359 crypto asset businesses in the last 4 years. We have rejected submissions that didn't include key components necessary for us to carry out an assessment, or the poor quality of key components meant the submission was invalid, said the agency. Blockstream Mining is raising third round for its hashrate token. The hashrate-backed note lets investors lock in the hash price for up to 4 years. Priced at $31,000, it gives investors a share of the Bitcoin produced by the mining company. The first 2 rounds of the BMN notes raised a total of around $7 million, reports CoinDesk. Bitcoin Plus news. The eCash edition is set to take place in Berlin on October 11th through 13th at W3 Hub. The event date has been moved back 1 day. The Hack Plus Beach edition will take place in Florianopolis, February 19th through 22nd, 2025. No venue yet. The Mempools edition is set to happen in Austin, Texas, May 7th through 9th of 2025 at the Palmer Event Center. Secure your tickets here, and there is a link, and I will include a link, as always, to all of the items I go over in the show notes. Okay, next article is from Cointelegraph, and we certainly can't avoid a Bitcoin price discussion after the past week of down action, so figured why not go with Arthur Hayes? So Arthur Hayes predicts Bitcoin rally after closing short position. This was posted today on Cointelegraph. Arthur Hayes has closed his Bitcoin short position following initial concerns about a deep correction over the weekend. On September 6th, Hayes, the former CEO of the BitMEX cryptocurrency exchange, warned that Bitcoin could correct below the $50,000 psychological mark this weekend as he opened a short position to capitalize on the downside. Easing investor concerns, Hayes announced the closure of his short Bitcoin position, expecting a potential Bitcoin rally as soon as next week. He wrote in a September 8th X post, "Closed my BTC short, made 3% profit, enough to cover my food and bar tab for KBW, with bad girl Yellen watching markets and releasing a weekend statement. If stuff continues to puke next week, Bitcoin might rise, anticipating more dollar liquidity." According to Hayes, Bitcoin's price may surge as early as next week, driven by increased United States dollar liquidity from the Federal Reserve. The current weakness in the economy and financial markets could prompt this action. The expectation of more liquidity injections from the world's largest economy could significantly bolster crypto investor sentiment and Bitcoin price action. More downside action in traditional markets could indeed invite a liquidity injection by the Fed, Hayes wrote in a September 7th X post. Bad girl Yellen is watching. If markets go down more, she will definitely pump up the jam by printing more money. And then he posted, I think, an article that Yellen says no red lights flashing as U.S. makes soft landing. Treasury Secretary says she's attentive to downside job risk. Yellen reiterates the importance of engaging with China. The M2 money supply, which estimates all cash and short-term bank deposits across the U.S., could be the key to the next Bitcoin rally, according to Jamie Coutts, chief crypto analyst at Real Vision, who wrote in a May 16th X post, "This is due to a high correlation with Bitcoin bull cycles of the big three I track in my Bitcoin liquidity framework. Global M2 appears to capture the most of the moves." However, the rate of change in the money supply is more important than the nominal value, as Bitcoin usually moves with shifts in M2 momentum, added Kautz. At the beginning of May, the M2 money supply turned positive year over year for the first time since November 2023, signaling that investors could soon start looking for hedges against inflation, such as Bitcoin. Investor sentiment took a hit this week after fears of a sub $50,000 Bitcoin correction crashed the crypto market sentiment to extreme fear. Despite widespread concerns, Bitcoin's September downside remains in line with previous Bitcoin halving cycles, wrote popular analyst Rect Capital in a September 6th post. When BTC retraced 7% in September in 2021, BTC rallied 39% in the following October. Bitcoin is currently down 9% this September. September has historically been a month of downside volatility, with average Bitcoin returns at minus 4.69%, making it the most bearish month based on average returns according to CoinGlass data. Next up, from Bitcoin.com news, this was posted today. Corporate Bitcoin adoption surges in 2024, River Report reveals. River's report indicates that as of August 2024, businesses collectively hold 683,332 Bitcoin, which represents 3.3% of the total Bitcoin supply. This marks an impressive 587% growth in corporate holdings since 2020, with a 30% increase over the past year. The report also reveals that U.S. domiciled companies account for 49.3% of these holdings, representing $19.7 billion. Among the largest holders, MicroStrategy and Tether dominate, collectively accounting for 85% of corporate Bitcoin purchases in the first half of 2024. No surprise there. The report emphasizes that business adoption of Bitcoin has accelerated dramatically over the past year. Publicly traded companies with Bitcoin holdings have grown by 40% from September 2023 to August 2024. River forecasts a continuation of this trend, estimating that business Bitcoin holdings will increase by between 204 and 519 Bitcoin daily until 2026. Additionally, the report notes that businesses favor holding real Bitcoin over exchange-traded funds, as the latter could classify them as investment companies, imposing regulatory hurdles. From a legal perspective, real Bitcoin is classified as a commodity, whereas ETFs or any kind are classified as a security, Rivers report states. Under the Investment Company Act of 1940, businesses that own securities making up more than 40% of their balance sheet assets are regulated as investment companies. For most businesses, being designated as an investment company introduces significant costs and reporting requirements. Rivers' report adds, therefore, most businesses with Bitcoin exposure prefer to hold real Bitcoin instead of Bitcoin ETFs. Rivers' insights come from its growing client base, which has seen a 68% increase in the number of businesses served since August 2023. Notably, 70% of these companies have never sold any Bitcoin after acquiring it, viewing it as a long-term asset. Despite initial concerns about accounting and tax implications, 95% of surveyed clients indicated plans to expand their Bitcoin holdings. This shows a strong conviction among businesses to incorporate Bitcoin into their financial strategies, driven by its potential to hedge against inflation and diversify treasuries. The report also highlights successful case studies of companies integrating Bitcoin into their operations. For example, the home builder Summer Place Homes uses Bitcoin as a hedge against cyclical downturns, while Real Bedford Football Club has leveraged Bitcoin as both a treasury asset and a core element of its brand identity, resulting in increased revenues and a growing fan base. I guess all the Bitcoiners. River concludes that while Bitcoin adoption as a treasury asset has not yet gone mainstream, the potential for strategic advantages in financial security is driving more businesses to explore this avenue. And you'd love to see it. Next up, also from Bitcoin.com news, this was posted today. Bitcoin's hash rate reaches 692 exahash per second, nearing the 700 exahash per second milestone. On Sunday, September 8th, 2024, Bitcoin's total hash rate spiked to an impressive 692.28 exahash per second, edging ever closer to the 700 exahash per second milestone. This marks yet another all-time high for Bitcoin's network this week. Throughout 2024, the network has experienced a significant boost in computational power, climbing from 393 exahash per second to its current level. This translates to an increase of more than 299 exahash per second since September 8th, 2023, reflecting a 76.15% growth over the past year. Over the past week, the hash rate jumped by 66 exahash per second, landing at the current 692.28 exahash per second. This increase coincides with the network's mining difficulty nearing its highest levels, while miner revenue has taken a steep drop. The hash price, or estimated value of 1 petahash per second, has dropped below yesterday's $39.01 per petahash per second per day. As of Sunday, it sits at $38.55 per petahash per second, according to Luxor's hashrateindex.com. The steady climb in Bitcoin's hash rate points to a deeper shift, reflecting the growing strength and persistence of the network. The elevated computational power has resulted in quicker block intervals, averaging about 9 minutes and 28 seconds. This rapid pace is setting the stage for the upcoming difficulty adjustment on September 10th, with a projected increase of 5.48%. Should this estimate hold, the difficulty will break the previous all-time high set during the 2-week epoch that began on July 31st. And of course, we like to see growing hash rate because that means the network is secure. And on a separate note, I recently bought a BitAxe miner to plug in at home, solo miner, and I probably won't get much Bitcoin out of it, but it's for the cause. And they're cheap. They're only $150, and you can get them in a lot of different places. So I would check that out if you haven't already. Next up, Crypto Potato. This was posted on September 6th. Venezuelan opposition leader proposes Bitcoin as national reserve asset. Maria Corina Machado, a leading figure in Venezuela's opposition, has proposed a plan to adopt Bitcoin as a national reserve asset. In an interview with Alex Gladstein from the Human Rights Foundation on Thursday, she called the cryptocurrency a lifeline and a vital means of resistance against the country's economic collapse. And I think the interviews actually included a link to the YouTube version of it. In the article, I recommend you check it out. It's actually pretty good. Her proposal seeks to address Venezuela's inflation and financial instability, which she attributes to years of mismanagement by the governments of Hugo Chavez and Nicolas Maduro. Machado's plan mirrors a recent suggestion by former U.S. President Donald Trump, who also advocated for a similar Bitcoin reserve for the United States. The 56-year-old emphasized that the cryptocurrency could play a crucial role in the country's recovery, not only as a tool to escape hyperinflation, but also as a safeguard for wealth as the country rebuilds from years of economic devastation. She criticized the financial policies of both Chavez and Maduro. This financial repression, rooted in state-sponsored looting, theft, and unchecked money printing, crippled our economy despite our oil wealth, she said. The politician pointed out that many citizens have turned to Bitcoin as a means to shield themselves from the country's volatile currency and government-controlled exchange rates. She said that using the cryptocurrency has allowed citizens to protect their wealth and, in some cases, finance their escape from the country. Bitcoin bypasses government-imposed exchange rates and helps many of our people. It has evolved from a humanitarian tool to a vital means of resistance, she stated. The opposition leader believes adopting it as a domestic reserve asset could help the South American country recover its stolen wealth and support its poorest citizens. We envision Bitcoin as part of our national reserves, helping rebuild what the dictatorship stole, she said. Machado also highlighted the people's resolve to restore democracy, acknowledging their long-standing efforts in challenging the regime. She spoke to the use of technology as a tool to secure financial independence and aid in rebuilding a liberated country, emphasizing that Bitcoin donations and assets would be protected from government seizure, making it a crucial part of her strategy for a peaceful transition away from dictatorship. The former deputy of the National Assembly of Venezuela pointed out that her country's currency has drastically lost value, with inflation soaring to 1.7 million% and causing essential prices to double almost every 2 days. Since 2016, inflation has surpassed 8 million%, prompting millions to flee for stability. Looking toward the future, she envisions Bitcoin playing a central role in her nation's recovery, ensuring transparency, property rights, and economic freedom. So again, in the show notes, there's a link to the article. The article has a link to the YouTube interview, which again, I highly recommend. Next up from CoinDesk, this was posted on September 6th. Telegram CEO Pavel Durov promises changes, noting it's become easier for criminals to abuse our platform. I think we talked about this earlier. Let's see if there's anything new here. Pavel Durov, the CEO of Telegram, was recently jailed in France over allegations his social media and messaging giant failed to police illegal content, said Thursday that the app's rapid growth made it easier for criminals to abuse our platform and promised changes. Durov, in a post on Telegram, expressed surprise at his arrest in France, writing that it's unusual for a country to hold a founder accountable for what other people do on the platform. In his post, he says, "I'm still trying to understand what happened in France, but we hear the concerns. I made it my personal goal to prevent abusers of Telegram's platform from interfering with the future of our 950 plus million users." My full post below. He nonetheless said that establishing the right balance between privacy and security is not easy. Durov said that when Telegram is unable to agree with a country's approach, it leaves that country as it did with Russia. Well, the only problem with the centralized platform is that, of course, it's going to have a founder, and the government can come after them and make them change their policies. And so the only real solution to freedom of speech is peer-to-peer. And if you haven't checked it out already, I would check the app called Keat, which has been built on a platform that's, I think, Tether is behind that. But it's essentially a peer-to-peer communication application, video, calls, texting. And, the only downside of that, of course, is you have to have whoever you want to communicate with has to download it, and then you guys have to set up your own channel. But it's peer-to-peer software, and it's just sort of out in the wild, a lot like Nostr, except that it's not tied to a particular relay. So whereas Nostr could, in theory, be censored by having relays taken down, this one is a little bit more censorship resistant, or at least that's the story. So I'm actually working on a blog post on that that'll be coming out in the next week or so. So you might want to check that out. But check out Keat. Next up, crypto news. This was posted on September 7th. FBI warns of North Korean hackers using Android malware to steal crypto keys. The FBI has issued a warning about a sophisticated new Android malware called Spy Agent, discovered by McAfee, which is designed to steal cryptocurrency private keys from users' smartphones. Spy Agent targets private keys by leveraging optical character recognition technology to scan and extract text from screenshots and images stored on the device. McAfee's analysis reveals that Spy Agent is distributed through malicious links sent via text messages. When users click on these links, they are redirected to seemingly legitimate websites that prompt them to download an app disguised as a trustworthy program. In reality, this app is the Spy Agent malware, which compromises the phone's security once installed. The malware masquerades as various types of applications, including banking apps, government services, and streaming platforms. Upon installation, it requests permissions to access contacts, messages, and local storage, facilitating its extraction of sensitive data. McAfee reports that Spy Agent has been detected in over 280 fraudulent apps, and is primarily targeting South Korean users. The alert comes on the heels of another malware threat identified in August. The Cthulhu Stealer, which affects Mac OS systems, similarly disguises itself as legitimate software and targets personal information, including MetaMask passwords, IP addresses, and cold wallet private keys. The same month saw Microsoft uncover a vulnerability in Google Chrome, which North Korean hacker group Citrine Sleep exploited to create fake cryptocurrency exchanges and fraudulent job applications. These activities led to the installation of remote-controlled malware that also stole private keys. The vulnerability in Chrome has since been patched, but the rise in these types of cyber attacks has prompted the FBI to issue a formal warning about North Korean hacking activities. Users are advised to remain vigilant and avoid downloading apps or clicking on links from unknown sources to protect their digital assets from such sophisticated threats. And so if you probably shouldn't be storing your private keys on your phone. Probably want to keep it in a hardware wallet, and you probably want to have multi-sig in case one of those wallets gets compromised, and you have a backup, 2 of 3. As reported, August saw a surge in crypto-related scams with a staggering $310 million lost to various exploits, making it the second highest monthly total this year. However, 10.3 million of the stolen assets were eventually recovered or returned, leaving the net loss at $300.6 million. Phishing incidents emerged as the most damaging, accounting for approximately 293 million of the total losses. 2 particularly large-scale phishing attacks resulted in the theft of $238 million in Bitcoin and $55 million in DAI stablecoin. Aside from phishing, other notable losses in August included attacks on several crypto projects. For example, the Ronin network, an Ethereum virtual machine-based sidechain, was exploited by a white hat hacker on August 6, resulting in the theft of 4,000 ETH, valued at $9.85 million at the time. Additionally, flash loan attacks, though still concerning, resulted in relatively lower losses of 1.2 million in August compared to previous months. In contrast to the rise in phishing and other forms of exploitation, exit scams saw a significant decline, with losses dropping to 800,000 in August, down from around 3 million in July. And finally, an article from Bitcoin Magazine. This was posted on August 30th. The fight for Bitcoin privacy has truly begun. First they ignore you, then they laugh at you, then they fight you, then you win. The quote, commonly misattributed to Mahatma Gandhi, has been overused to the point of exhaustion in the Bitcoin space, typically invoking the suggestion that the laughing stage is over. In most of these cases, the insinuation that the fighting stage has begun was overblown, however, perhaps inspired by little more than a comment from some politician or finance professional. But on April 24th of this year, the quote finally rang true. On that day, the U.S. Department of Justice, via the District Court of the Southern District of New York, announced the indictment of Samurai Wallet co-founders Keone Rodriguez and William Hill. Rodriguez, Samurai Wallet CEO, who pseudonymously operated the Samurai Wallet handle on Twitter and X, was arrested early that morning in his home state of Pennsylvania. Hill, aka T-Dev, or at Samurai Dev on Twitter, meanwhile, was arrested in Lisbon, Portugal, where he resided at the time of writing this article. The DOJ intends to extradite him to the U.S. Both of them are accused of running an unlicensed money transmitter and earning millions of dollars in fees doing so. For this, Rodriguez and Hill each face a maximum prison sentence of 5 years. On top of that, the duo was charged with money laundering as well. According to the DOJ, Samurai Wallet was used to launder over $100 million of crime proceeds from darknet markets, fraudulent schemes, and other illicit activities. This could add a whopping maximum 20 years to their sentence. Samurai Wallet's web servers and the domain samurai.io were also seized, rendering the wallet largely unusable, though users could still recover their Bitcoin through other wallets using their backup seeds. Around the same time as the Samurai Wallet developers' arrests, the FBI issued a public warning to cryptocurrency users, stating that they may lose their funds due to criminal seizures if they don't move their holdings to regulated entities. Although Samurai Wallet was not mentioned by the agency, the timing of the note suggests the warning was no coincidence. Together, it seemed to represent a step change for Bitcoin and Bitcoin development. Bitcoin comes from a long tradition of privacy activism. In a world where money is increasingly going digital, cypherpunks have since the 1990s attempted to create a form of electronic cash in order to prevent an Orwellian future where every transaction can be monitored and potentially censored. Similarly, Douglas Jackson, around the turn of the millennium, offered a gold-backed digital payment system with privacy features called e-gold, which eventually had to shut down operations because Jackson did not register his company as a money transmitter. eGold required a money transmitter license because it held gold in reserve on behalf of its users, but it has since then generally been assumed that creators of non-custodial wallet software did not qualify as money transmitters. As long as developers never took control of user funds themselves, they did not need to register with the United States Department of the Treasury's Financial Crimes Enforcement Network, or FinCEN, and therefore wouldn't need to apply anti-money laundering, AML, and know your customer, KYC, checks on their users. Or so it was thought. Crucially, this assumption was in large part based on guidance from FinCEN itself, published in 2013. By extension, many presumed that developers wouldn't be held accountable for how their software is used. If non-custodial Bitcoin wallets are used to launder money, those engaged in the activity itself would be breaking the law, but it was generally not believed to be the responsibility of the creators of these wallets to prevent this from happening in the first place. Samurai Wallet was indeed a non-custodial wallet. Users stored their own private keys in their wallet software, so Rodriguez or Hill at no point controlled these Bitcoin. By default, the Samurai Wallet application did communicate with the central server to send and receive transactions, but even this could be sidestepped by connecting to the Samurai Dojo, a personal internet-connected device that embedded a Bitcoin node. Importantly, Samurai Wallet was marked as a privacy wallet, and its main privacy feature, Whirlpool, did fully depend on the Samurai server. Specifically, Samurai Wallet users could, coordinated through the central server, collaborate to make coin-join transactions. In groups of 5, users would contribute an equal amount of Bitcoin, for example, 0.01 Bitcoin, to a transaction, which sent back the same amount to each of them. Because there's no way to link specific transaction inputs to specific transaction outputs, this essentially mixed their coins. Blockchain analysts would be unable to trace back the history of these coins, except to the extent that they'd know they must have come from one of these 5 inputs. Furthermore, Whirlpool users could opt to automatically repeat such mixes, even further obfuscating their transaction history. In addition, Samurai Wallet offered a service called Ricochet. This enabled users to send Bitcoin to newly generated addresses they controlled themselves multiple times, somewhat frustrating blockchain analysis as well. Although this is possible with any Bitcoin wallet, Samurai Wallet automated the process. The allegation, as put forth by the DOJ, is that these tools were indeed used to launder money. What's more, the federal department argues that the Samurai Wallet co-founders intended this to be the case. This accusation is largely based on public as well as private communication about their service, including some statements by Rodriguez and Hill on Twitter and in their pitch decks intended for investors, which mentioned that individuals who engaged in illicit activity or on restricted or dark gray markets would be among their user base. Whether these statements truly indicate that Rodriguez and Hill intended their software to be used for illicit purposes, as opposed to it just being tough marketing talk from developers who ultimately wanted to offer financial privacy tools, will have to be proven in court. And perhaps more importantly, the Samurai Wallet arrest challenged the long-standing assumption that developers don't have to register as money transmitters and perform the associated AML and KYC checks, though this assumption has already been put to question in a different corner of the cryptocurrency space, and that is Tornado Cash. In August 2022, the U.S. Treasury's Office of Foreign Assets Control added Tornado Cash, a smart contract on the Ethereum blockchain, to its OFAC list. It made interacting with the smart contract illegal under U.S. law. Later that same month, Alexei Pertsev was arrested by the Dutch police. In the years prior, Pertsev had, along with Roman Storm and Roman Semenov, founded and operated software development company PepperSec. Key to their efforts had been the development of Tornado Cash, as well as supporting infrastructure. As a smart contract, Tornado Cash technically functions autonomously. Although Pertsev helped develop the tool, it exists across thousands of Ethereum nodes around the world. After it was released, Pertsev had no way to control how it was used or who used it. Anyone could send an amount of Ethereum to the smart contract, which, utilizing a cryptographic trick called zero-knowledge proofs, enabled them to withdraw that same amount from the smart contract, but to a different account. Here, too, there was no way to link the ETH going into Tornado Cash to the ETH going out. Thus, the smart contract essentially functioned as a mixing service. To make this feature effective, PepperSec also developed supporting infrastructure, which in part relied on relayers. Basically, Ethereum users could be tasked with paying the Tornado Cash fee, for which they were in turn rewarded Torn tokens. This aspect of the design, the relayers and the Torn tokens, centered around a different smart contract on the Ethereum blockchain, which technically was implemented as a decentralized autonomous organization, or DAO. In addition to that, PepperSec operated a service that offered an easily accessible graphical user interface for the smart contract and its surrounding infrastructure. Importantly, Tornado Cash, as well as the supporting infrastructure, was all non-custodial software. Pertsev, Storm, and Semenov developed code, but they at no point controlled any of the ETH going into the smart contract. Although they couldn't control how Tornado Cash could be used, it's less obvious to what extent the same was true for the supporting infrastructure. Like many things Ethereum, claims of decentralization were at least in part grounded in marketing more so than in technical reality. In either case, for the Dutch prosecutor, the fact that Pertsev and his colleagues never took custody of any ETH did not make much of a difference. In her view, PepperSec was de facto ran as a business, which, albeit indirectly through the Torn token, earned an income from Tornado Cash and the supporting infrastructure. She argued this made Pertsev responsible for how Tornado Cash was used and by whom. In particular, she pointed out, Tornado Cash has been used to launder well over $1 billion US, for example, by North Korean state-funded hackers known as the Lazarus Group. Pertsev knowingly facilitated this kind of activity through the software he developed, she argued, and did nothing to prevent it. He had to be held accountable. And as it would soon turn out, it wasn't just the Dutch prosecutor who held this belief. After a year after Pertsev's arrest in the Netherlands, his PepperSec co-founders Storm and Semenov were indicted in the United States, with the former, who resided in the U.S., arrested. Semenov does not live in the United States. At the time of writing this article, his whereabouts are unknown, but he is likely in a country without an extradition treaty with the U.S. Much like Pertsev, both of them are charged with money laundering as well as running an unlicensed money transmitter business and sanctions violations. Storm will stand trial in New York this September. The various arrests quickly appeared to have a chilling effect on other Bitcoin developers. Even before Pertsev's arrest, Bitcoin privacy wallet Wasabi Wallet, Samurai Wallet's main competitor, in March of 2022 decided to implement AML checks for their mixing software and reject coins that were suspected to have been used for illicit activity. Although Wasabi Wallet, like Tornado Cash and Samurai Wallet, was fully non-custodial, the company behind the wallet, ZK Snacks, coordinated CoinJoin mixes through a central server. This new policy was harshly criticized by, among others, the Samurai Wallet team and other privacy-focused Bitcoiners. Rodriguez and Hill loudly and proudly proclaimed that their mixing service was open for business to anyone, and on social media adopted a much more adversarial attitude toward regulators and their KYC AML regime. Indeed, it was exactly this attitude that may have gotten them in legal trouble. More recently, the Samurai Wallet arrests moved other Bitcoin developers to take additional precautions as well. Just one day after the indictment, Sparrow Wallet, which had been compatible with Samurai Wallet's Whirlpool, for example, released a new version of its software that disabled this feature. Shortly after, development company Async announced that its Phoenix wallet, a Lightning wallet, would be removed from U.S. app stores, citing on Twitter that recent announcements from U.S. authorities cast a doubt on whether self-custodial wallet providers, Lightning service providers, or even Lightning nodes could be considered money services businesses and be regulated as such. And in what was arguably the biggest setback for privacy in Bitcoin's short history, Wasabi Wallet soon after announced to discontinue its mixing service altogether. With Whirlpool already down, the other major CoinJoin coordinator would cease operations per June 1st of this year. Just weeks after the Samurai Wallet developer's arrest and the events that unfolded immediately after on May 14th of this year, it was time for Pertsev's sentencing. In the courthouse of Hertogenbosch, a small city about an hour south of Amsterdam, the Tornado Cash developer received the bad news. The panel of judges essentially agreed with the prosecutor on all counts and in some ways went even further than the prosecutor was willing to go. The judges ruled that Pertsev was fully responsible for how the smart contract was used. The fact that some of the code that PepperSec produced was unstoppable was not considered a valid excuse. Tornado Cash functions in the way the defendant and its co-founders developed Tornado Cash, they stated, so the operation is completely their responsibility. Pertsev was sentenced to 64 months in Dutch prison, though he did file for an appeal, which at the time of writing is pending. The next Tornado Cash court case will take place in New York, where Pertsev's PepperSec co-founder Storm will stand trial. While the Dutch verdict should technically not affect the outcome of the American proceedings, the case and sentencing in the Netherlands might offer an indication of what can be expected. The Dutch prosecutors shared many of their files with their American colleagues. Meanwhile, the first hearing for Samurai Wallets Rodriguez took place in New York last May as well. He will be awaiting the full trial on home arrest in Pennsylvania. Still, despite these significant setbacks for Bitcoin privacy, the prospects of Bitcoin mixing are not altogether dead. Most obviously, all American trials are yet to take place, and even if Rodriguez, Hill, and or Storm are found guilty, they too can appeal to higher courts. Meanwhile, JoinMarket, a tool that lets users create CoinJoin transactions without a central coordinator, continues operations uninterrupted. And while Wasabi Wallet has taken its central coordinator offline, the wallet itself will still be maintained. What's more, alternative Wasabi Wallet coordinators have already started offering their services while not operated by ZK Snacks. This enables users of the wallet to create CoinJoin transactions between them in much the same way. Because such coordinators can even be operated anonymously over Tor, future prosecution of such services may be even harder as well, regardless of the outcome of the upcoming trials. The fighting stage indeed has begun, and the fight is far from over. Whether the adage will ring true and the winning stage follows next remains to be seen. And this is why Satoshi disappeared. You give birth to an open source software that revolutionizes the world anonymously, and you disappear. And that's probably going to have to be the new model, I think. It'll be interesting to see how the trials go in the US and whether or not freedom of speech, software is speech, soft code is speech. Ultimately, this stuff gets to the Supreme Court, but it certainly seems kind of weird it'd be like holding Ford accountable for a traffic fatality because they're the manufacturer of the car. So I guess, we live in interesting times. Finally, I wanted to highlight this week's featured post on the Bitcoin Fortress Substack. It's entitled "The Freedom of Focus: How Saving in Bitcoin Can Transform Your Life." And I will include a link in the show notes. And then I wanted to give a shout out to this week's top boost on Fountain last week, at God's Death with 236 sats. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is included in the show notes. Help me get to 10,000 followers. I'm really close. It's pretty awesome. And I actually just got 400 free subscribers on Substack this week, which is pretty awesome as well. And with that, I will talk to y'all next week. Bye-bye.